How much money can you make really in the Emaar Oasis? Today, in this episode, we'll be focusing on the real potential of the investment in Palmiera 1. I've done a full breakdown of the analysis of the full 25 recent transactions that have taken place since their initial launch in 2023 to really see the scope of how high Palmiera got pre-conflict and where it could go by the time of handover and the maturity stages of the Emaar Oasis community over the next 5 years. If you're wanting to find out about the ROI, the ROE, and the IRR of your investment in the Emaar Oasis Palmiera, this is the video for you. Thank you so much for watching and continuing to watch. So let's break it down. Emaar Oasis Palmiera, why I chose it. The reason I chose Palmiera 1 to break down in this initial series is because it's the closest project to handover within the community Emaar Oasis. The handover date is Q4 2027, and so far there has been 25 transactions since the initial launch on resale. We're actually going to only be reviewing 23, the reason being as 2 properties were gifted or sold to a family member at a half price rate, which isn't the true value of the Emaar Oasis community itself. So to keep things straight, to keep things dilated and looking directly at the data, it'll only be the 23 that we will be reviewing specifically. Now, the source of this data was from the Dubai Land Department, Property Monitor, Property Finder, and the Ute. And if you are looking for the same resources, drop a link below. I'll send you the PDF and I'll show you every resource. Now, the scope. We'll only be looking at the 4 and 5 bed villas in Palmiera 1 community within the Emaar Oasis community. This is to keep it short, to keep it direct, and to keep the calculation fair. We will, in time, look at the different communities and look at the future growth. Palmiera is obviously going to probably see one of the highest appreciations to begin with because it was the cheapest price point. If you are watching this and you are looking to take advantage of another of these phase 1 investments, drop me a message because Emaar have got something spectacular coming out. For anyone that doesn't know what Emaar Oasis is, or this is the first video you have touched on, let me break it down. Emaar Oasis is built by the master developer Emaar, who built the Burj Khalifa. It is going to be an only villa and mansion community. Emaar Oasis is the same size as Dubai Hills. Dubai Hills has over 27,000 units. Emaar Oasis is reported to have, or to be only launching, 3,500. Hence why it being a direct comparable to Emirates Hills, with the exclusivity, scale and size of this community with mansions and villas. Now, what is really unique about Emaar Oasis is 25% of this vast land is purely for lagoons and walkable paths and greenery. This means that you could run a marathon and more around the cycle paths and parks within the community. So for anyone that's looking for exclusivity, peace and serenity, but a little bit closer to the actual livable area of Dubai rather than the tourist spots, Emaar Oasis will be for you. Now, let's break it down. You'll see in this graph here that the original launch price started as low as 1,500 square foot in 2023. There was 3 different types of villas within Palmiera. You had your classic, chamfered, and contemporary, ranging from 5,600 to 6,200 square foot. We then went on to the 5 beds that also had the 3 same styles, chamfered, classic, and contemporary, starting at 7,700 square foot up to 10,300. Now, what you'll see and what's noticeable within this graph is it started at 1,500 square foot approximately, and the peak, which we actually sold here in White & Co, was a resale value of 2,276 of a spectacular 4-bed on a large plot on the lagoon. Now, this peaked back in November, and we had seen a huge rise in transactions back then, where on average large lagoon facing units were transacting no less than 12.5, as I said, up to around 14.5, and your 5 beds were transacting no less than 16.6 million. This means from the original launch price to November, where the highest transaction took place, there was a 52% appreciation for that original seller. Now, why that is interesting is if we look at the peak of Palmiera at 2,276, this is actually the most recent launch price of Maeve within the Emaar Oasis community. Now, what I've been speaking to a lot of my buyers and investors, and maybe you'll be interested in this while watching it is Palmiera was really the only cluster out of all the clusters so far launched in Emaar Oasis that had seen a real premium. The average uplift was around 30%, and as I said here, the peak had been 52% above that original OP price. The reason this cluster had really seen the appreciation was because it's closest to handover. Emaar also control the market, so every cluster was launched at a higher price point. So as I said, Palmiera 1 was launched at around 1,500 to maybe 1,650 square foot, depending the location, depending on the size and the scale of your property. Then it went to Palmiera 2, which was just a little bit higher. Mirage, you started at around the 1,650 to 1,700. Then your most recent launches jumped all the way up to 2,200. So what we've seen from Emaar was on average 5% appreciation per launch per phase in the Emaar Oasis community. Now that is very interesting because as a phase 1 or early phase investor in Emaar Oasis or any Emaar development, they really control the appreciation of your property because they control the launch prices of each. What it then comes down to as a buyer is if you are looking to be an investor, because think, although Palmiera 1 are seeing the highest appreciation now, they will also be the longest to live within a construction site. Or would you rather pay that little bit more from Emaar, have the same payment terms, but by the time your property hands over, the community is more mature, the vibes developed, and you're not living so much into a construction site. And that's really the variable that you have to ask yourself. What stage do I want to move into this property? Now, what we had seen, and I'll break through the numbers here, is as I said, pre-war, the cheapest one was around 1,495, let's say 1,500 a square foot. Resale conflict, other than the peak, was around 1,950. Those were from transactions for the 4 beds between November 25 to February 2026. Again, we had that peak one at 227, but that's really down to the plot and the size, end user buyer. The 4 beds in Palmiera, as I said, their launch price back in August 2023 was around 1,500. They had seen a minimum of a 30% appreciation come November through to February, where the transaction price averaged out about 1,947. We did see that peak transaction in the November at 2,276 a square foot, which was outlined as a 52% appreciation. That was a spectacular place on the lagoon, very much an end user, and to be honest, in my eyes, still a great deal. With the 5 beds, their appreciation was a little bit different. They started off at around 1,600 a square foot. Their transactions, there's not been many, I will say, because there's so few of them, was sitting at around nearly 2,000 at around 1,965. And then what we had seen is that's a 20% uplift, and that was their peak resale. Their average was around 1,800, which was a 10% uplift. Now, what is interesting is that I've actually reviewed the data of where the prices dropped to during the conflict. So we've just reviewed the pre-conflict, but during the conflict, we actually seen the 4 beds in Palmiera drop to around 1,600 a square foot. So that means they've actually dropped 15%, in line with what the data shows on the news as well, that we were seeing distressed deals at least drop 15% to have them sold. Now, there are a few transactions that aren't yet on the DLD site because they've not transferred. However, I do know they're in contract, and these units are actually being sold at the OP price, where, trust me, if you bought one of those, you are going to be thanking yourself. Now, what's interesting about that is these original investors technically are the only real investors in Emaar to see 30 to a 50% drop in prices for reselling their units. And I mean, they weren't on the lagoon, they were parking road facing for the original OP price. Some even took a small hit, but people were scared of the uncertainty and the unknown. Also, a lot of people's jobs have been affected, hence the reason of selling. These were true distressed deals in my eyes. The 5 bedrooms, I must say, have held value, but that's because these 5 bedrooms, the owners, because many of the Palmiera original owners were signature clients, that they've not resold them. They see the value in them, and please also note, Palmiera is 75% paid. So a lot of these investors have already paid the full amount. We actually did see some investors pre-conflict take equity out or mortgage the remaining amount of their property to reinvest into other projects around Dubai. So that's why we haven't seen drastic distress deals in the Palmiera, because of how far along they are on their payment terms. Now, this is super interesting. You'll see this graph and you'll often see me say the only real comparable or competition to Emaar Oasis is Emirates Hills. Now, the reason I state that is because even if we look at the Palm Jumeirah, there are townhouses and apartments on this island, whereas Emirates Hills, just like Emaar Oasis, only have villas within their community. Yes, there's no golf course in Emaar Oasis, however, there is a crystal swimmable lagoon, which is super unique within itself. Now, the reason I'm stating this is whether you can still obtain a distressed deal or a close to distressed deal within Emaar Oasis. Let's say we get something at 1,950, which is still 11% above the original OP. That would generally cover the transfer fees of what that initial buyer bought with the DLD, etc., etc. That price point for a 4-bed is still 50% under the most recent launch of Maeve 2, as we've seen, sitting at 2,200, and more than 100% cheaper than Dubai Hills and Emirates Hills, which are very similar communities to Emaar Oasis. Dubai Hills, because of the size and the scale, there are some luxurious villas in Dubai Hills, and it's the same developer, but there are a lot of apartments and townhouses and smaller units that probably have diluted the exclusivity of Dubai Hills as a whole. Now, why I'm breaking this down for you is, if you're watching this is an investor's video. This is what you can make over the next 5 years looking at this investment. So let me break down how the 4-bed in Palmyra IRR actually stacks. So let's say we buy a 4-bed at 10.29 million dirhams, 6,200. So let's say it's a contemporary, one of the larger ones. That works out, you're buying it at 1,659 a square foot. Let's say our target resale is 3,500 a square foot. So that is still cheaper than Eden Hills of Dubai Hills, the golf places of Dubai Hills, the fairways of Dubai Hills, but a little bit more expensive than a Sidra, let's say, but I wouldn't really call a Palmyra and a Sidra comparable. But let's meet in the middle. And it's starting at your very old and untouched Emirates Hills units. So let's say our resale target in 5 years is 3,500. Why I'm saying 5 years is I personally believe by the time of handover, which is in 1 year, we would be reselling for at least 2,200 to 2,500, which is a 700 to 1,000 dirham jump from the original OP at 1,500. You buy a property at 5,000 to 6,000 a square foot, you're going to be seeing at least a 4.5 to 6 million dirham appreciation on your original purchase price. The reason I'm keeping it that conservative is because when the Palmyras will be moving in, they will be the first phase. So the amenities, the vibe, the community, the schools, your friends will not all live there. It will very much be a building site, and I lived in Dubai Hills back 6 years ago when that happened, and it is a bit ghostly to begin with, and the appreciation really starts to jump as the amenities such as the malls, schools, hospitals form and are built. We've seen prices jump 25% overnight when Dubai Hills Mall handed over. These are that drastic. So that's why I'm giving you a 5-year period, because that's really when you'll see the maturity, when more than 50% of the phases will have handed over. So let's say year 1, handover next year. We resell this, the estimated value would be no less than 12.5. That means your ROI appreciation would be 22% and your actual IRR would be 22.2%. By year 2, 14.5. This would be similar price per square foot now to Tilal Al Gaf right in front of it, which again doesn't have a lagoon swimming through it, and their lagoon still isn't handed over and it's transacting at 2,500. Your IRR would be 20.2% and your ROI would be 44%. For the people that don't know the difference, the ROI is basically how much returned on the capital you've originally paid down. Now we know Emaar Oasis is an 80-20 and we know by handover you'll have paid that 100% down. Your IRR is how much money with how much you've tied in is making per year. Now the people that look at the IRR are usually people that are pulling money down from stocks, from ISAs, anything that it costs money to draw down, or you're making an interest on that money tied up elsewhere. Now the reason we look at the IRR, especially for investors, is if we're drawing money down and it's costing you money, or you're able to get 5 or 6% elsewhere because you're pulling it out of a bank account, we need to ensure your IRR tied up in this asset of a property is working much harder than it would be sitting in a bank. And this is why we're working out the equity. What I do have to note is I am not calculating it if you were to take a mortgage. I am calculating these if you were to pay 100%. But you get it, so on and so forth. What I have calculated is by year 5, we would be expecting you to resell this property at around 20% 21.7 million on the basis that you're reselling at 3,500 a square foot. That means over the course of the 5 years, you have made a 16.1% capital appreciation on your money down per year, and the overall return on investment is 111%. That means you have made 11.4 million on your original investment of buying your property at 10.3 million, which is over 2.1 million pounds in just 5 years. And this is the reason UK investors, Western investors, Asian investors repeatedly invest in Emaar and repeatedly invest in these types of properties where they're watching the community develop and buying in a product like Emaar Oasis, which is a unique asset. There's not many villas of this magnitude, and there's certainly not many communities which will be competing. Now, when we break down the 5-bed, it's obviously had a little bit of a higher starting price at 12.9 million. I must say, we're never going to be able to get a 5-bed in Palmiera at that price point again. We'll not be able to get that price point. So this one I'm going to kind of miss, because if we were to buy a resale, you'd be looking at 16 million, and therefore your price per square foot, your appreciation isn't going to be the same. But if you're an original buyer, or let's say you do even buy it at 17.9, you would still see an IRR of around 12% by the time of handover if we were to resell this at 20.55, which I actually do see the value of that property. If you're an original investor, they're looking to be making a 98% return on investment over the 9 years that they've actually invested in. That's a 14.7 per year, which is super interesting. Now, the main question I'm going to ask you, if you've got this far in the video, is why are you looking to invest? If you're looking to invest as an end user, what I would say is define if you're going to be using mortgage or cash. If you want to tie up cash and you've got the cash there, I would say buy in Palmiera, because you'll get a good return, especially if we get you a good deal in the shortest period of time. If you don't want to have 100% cash and you don't want to use a mortgage, what I would say is buy Emaar's most recent launch. Get on the payment plan, pay 10% every 6 months, because it's no longer how much profit you're going to make, it's a leverage game. How much can your leverage be making from you on the payment plan per year, rather than tying up that 100% capital. Now, if you are looking for more information, or if you are looking to sell, buy, or invest in Emaar Oasis, drop me a message today. Thank you so much for watching. Please like, subscribe, comment if you have any other questions, if you want what community you want me to break down next, and let me know your thoughts. But have a great day.